Hello and welcome back to Digital Assets Daily. Good morning, good afternoon, or good evening, wherever you are in your corner of the world. First article, Mnuchin says U.S. recovery has begun, will gain strength in third or fourth quarter. As we get down into the article, U.S. Treasury Secretary Steve Mnuchin said on Wednesday that the U.S. economy has already begun to rebound from the issue at hand and would improve dramatically in the third and fourth quarters. Mnuchin, who appears before the U.S. Senate Small Business Committee to review the progress of federal coronavirus rescue loan programs, said in written testimony that incoming jobs and other economic data show that we are well positioned for a strong phased reopening of our country. Mnuchin and Hovira Carranza, the administrator of the Small Business Administration, SBA, are expected to face tough questions over initial glitches in the launching of the $660 billion USD Paycheck Protection Program, also known as the PPP, to provide forgivable loans aimed at keeping employees of small businesses on payroll for 8 weeks during the lockdown. Many small businesses had difficulties getting loans due to technical glitches, while some well-financed publicly traded companies assessed multi-million-dollar loans, prompting Mnuchin to issue new guidance requiring the companies to return the funds. And as you might expect, with a program of this magnitude executed on a national scale in a record time, we initially experienced some complications. We resolved them quickly, Mnuchin said in his testimony. He said that the program was supporting employment of about 50 million workers and more than 75% of the small business payroll in all 50 states. And despite the Treasury chief's optimism over the economy, it was a long road back. While many jobs data unexpectedly improved, unemployment remains at 13.3%, a post-World War II high, with the jobless rate still rising for blacks and Asians and recovery to prior levels expected to take years. The World Bank said on Monday that the U.S. economy will still shrink by 6.1% this year, with further downward revisions likely for its global forecast of a 5.2% contraction. Another article, the inherently borderless acting OCC chief talks crypto, state licenses, and DeFi. If Christopher Giancarlo was crypto dad and Hester Pierce's crypto mom, will the U.S.'s new top bank regulator become crypto uncle? ? Brian Brooks, from the former Coinbase legal chief, took office as acting comptroller of the currency OCC at the end of May, barely 2.5 months after being appointed first deputy at the federal banking agency. In that time, he's already publicly suggested a federal payments charter for fintech companies, asked state and local governments to consider lifting the issue-at-hand lockdowns to protect the banking system, and published a request for public input on how banks look at crypto. The first proposal might be Brooks' most ambitious, creating a federal regulatory framework for tech firms offering some services traditionally offered by banks, something industry advocates have long sought but recognized as politically hazardous. A single federal framework would preempt the 50 states level money transmitter licenses that companies, including crypto exchanges, currently have to obtain. This state-by-state requirement requires exchanges to roll out services slowly, dependent on the different approvals rather than their technology stacks and scalability. Since the OCC's founding in 1863, banks under its charge have been allowed to operate across state lines, but non-banks looking to operate nationally must secure the numerous state licenses. Brooks told CoinDesk he views the OCC's role as keeping up with developments in technology in other areas and ensuring the national banking regulatory framework remains flexible to new rules, the new tools, and how they are being used. My job here is not to protect incumbents, and it's not to preserve the status quo, Brooks said. You know, I'm not curating a history museum here. The job I have is to make sure that the bank charter is flexible enough to maintain a safe, sound, strong American economy. And the shape of banking has to be flexible to accommodate. Part of this evolution includes the fact that banks aren't the only entities providing that were traditionally seen as banking services. He said, noting technology companies like Stripe provide payment and lending services. Banks themselves have been changing as well over the past several decades. These are banks that aren't significant depositories, including trust banks and credit card banks. There are also more entities that operate nationally rather than just on the state level. And I think the most interesting thing in this article is his use of the option and choice of Stripe, because all the way back to 2014, Stripe has been connected to Stellar. So back into the article, we have some of his ideas, including the payments charter stem from his need to keep up with the times, he said. Asked what other areas of crypto the OCC might look into, Brooks mentioned the wild frontiers of decentralized finance, DeFi, and lending as two examples. DeFi is in its real infancy. None of that's yet scaled, and yet is the most interesting thing happening in crypto, he said. Is it possible to deliver a full suite of financial services by algorithm without any central ledger keeper? Brooks also said a digital dollar, which he has advocated in the past, is something that should be developed by the government with private entities. A digital dollar issued and maintained solely by the Federal Reserve misses the promise of the digital dollar because it would be a centralized token that is not much different than the electronic ledger, he said. And as we get into another article, the U.S. Congress is to hold its digital dollar hearing. Tomorrow, the U.S. House Committee on Financial Services is holding a virtual hearing about the digital dollar or central bank digital currency, CBDC. The event promises to be interesting as two of the speakers hold contrasting positions on the topic, and Morgan Ricks, a professor at Vanderbilt University Law School, has previously argued that a digital dollar should allow consumers to hold central bank accounts. In March, Congress released a raft of stimulus bills for the issue at hand, and Rick's model of Fed accounts made an appearance. On the other side is Chris Giancarlo, the former CFTC chair and founder of the Digital Dollar Foundation, who has advocated for a tokenized digital dollar, likely based on blockchain or distributed ledger technology. The Digital Dollar Project was not involved in the drafting of the Congress bills. It released its first white paper last week, which makes the argument for tokenization. There are several reasons to support tokenization, but when we spoke to David Treat from Accenture, a Digital Dollar Project partner, he highlighted the cost of an account-based model. He compared a cash-oriented retail business today that he could receive cash from customers and turn around and use that cash to pay for a delivery. Tokenization has the potential to deliver these sorts of P2P payments without intermediaries. Risks co-authored an academic paper in 2018 recently updated that states Congress should authorize the Federal Reserve to give the general public, individuals, businesses, and institutions the options to hold accounts at the central bank, which we call Fed accounts. It continues, unlike the CBDC approaches currently under discussion, which would use complicated and inefficient distributed ledger technology and would be walled off from the existing system of money and payments, the Fed account CBDC would be seamlessly interoperable and the mainstream payment system and would rely on technologies that the Federal Reserve has used successfully for decades. However, the Congress bill proposals outlined pass-through accounts, which could be managed by commercial banks but ring-fenced as central bank money. While the provision of the service would be free, it would not be cost-free to administer. Tokenized models are not free either, but one benefit is they don't require reconciliation, which is a major cost contributor. However, there are infrastructure costs. Mirza Baradaran from the Irvine School of Law is another witness. In previous testimony, she highlighted that commercial banks have abandoned certain low-profit communities and customers. She stated that 25% of the U.S. citizens are unbanked or underbanked, with the resultant high fees to transfer money. The final witness is Jody Kelly, CEO of the Electronic Transactions Association, the ETA, an industry body for financial institutions, networks, and payments companies. Its members include the likes of American Express, Apple, Google, PayPal, and Western Union, as well as most of the big banks. This discussion, entitled Inclusive Banking During a Issue at Hand, Issuing Fed Accounts and Digital Tools to Improve Delivery of Stimulus Payments, will be streamed live tomorrow, June 11th at noon Eastern Standard Time. There was some stuff going around on Twitter earlier with Ripple and Flutterwave. But whenever we discuss Ripple, all of the connections that it has with Stellar, we like to share that as well. Flutterwave, from this article in 2019, last year, Flutterwave and Visa launch African consumer payment service Get Barter. As we scroll down into the article, we're just going to get straight to the meat and potatoes, as they call it, of this article. Let's give you a lead in at least. Flutterwave has processed 100 million transactions worth 2.6 billion USD since inception, according to company data. The company has raised 20 million from investors, including Greycroft, Greenvisor Capital, and MasterCard. In 2018, Flutterwave was one of several African fintech companies to announce significant VC investment and cross-border expansion. Paga, Yoko, Cellulant, and Minds.ie and Jumo. Flutterwave added operations in Uganda in June and raised a 10 million USD Series A round in October. This saw former Visa CEO Joe Saunders join its board of directors. The company also plugged into Ledger activity in 2018, becoming a payment processing partner to both Ripple and Stellar blockchain networks. So whenever you hear the Flutterwave, it's not just a partner of Ripple, it's also one of Stellar. So I want to leave this with a final thought. Whether you think you can or you think you can't, you're right. Remember, this is not financial advice. It is for entertainment purposes only. Hit that like and subscribe, and we'll catch you in the next one.